Welcome to Breakout Investors. Today we are pleased to be speaking with the management of Dolphin Entertainment, ticker DLPN, specifically the company's CEO, Bill O'Dowd. Joining me on today's call is Breakout Investor Brad Steveson. This call is being recorded on April 14th, 2022, and will be distributed via the Breakout Investor channel on YouTube via our podcasting network. Look for Breakout Investor content wherever you subscribe to podcasts. We are on Apple, Spotify, Audible, and most other platforms. Supporting materials for today's discussion will be posted on the Breakout Investors collaboration app, available on the app stores and at app.breakoutinvestors.com. The application and much of the research content is free. After registering or logging in, use the search bar at the top right of any page. Type in the ticker symbol DLPN, and the results will give you a link to this research post for this presentation and to other discussion and research relating to today's company. Those of you already on the platform can share your questions for the company using the Discuss tab in Brad's breakout room. So let's get the call started with me handing it over to Brad.
All right. Well, thanks, Josh, and thanks, Bill, for being here. And I just made James a presenter if he has anything he needs to jump in and talk about with us as well. As far as people listening right now, my plan was to open it up for if anybody else wanted to ask questions, just hit. Right now you're on mute and your video is off, but if you'll hit raise your hand on the screen if you have a question and you want to ask it yourself. Otherwise, you can type a question in the chat here if you'd like, or again on the platform, and I'll ask that. But I'll kick it off and say, Bill, it looked like it was a nice year for Dolphin. We're excited to be talking to you again. It feels like it's been a long time since I talked to you, but it really hasn't been. It's only been about 3 or 4 months, but it does, a lot of things happen in that amount of time. So congratulations on a nice year.
Thank you.
So I'm just going to kind of jump in with some of the questions that I had, and like I say, if we see some hands raised, we'll try to let some other people jump in and ask questions they may have as well. So first thing that jumped out at me, looking at the full year numbers, they looked like I say, they looked good. You were cash flow positive, operating positive. There was a little bit of an uptick in expenses just for the fourth quarter itself. And I know Alan had asked you a little bit about that on the call. And I heard I don't think he kind of pinned you down quite the way I would have wanted to. But is that, in order to drive those revenues, the margins compressed a little bit, I guess, during the fourth quarter. Is there any, is that something that was kind of a one-off thing that we should look forward to that expanding again looking forward, or what would you say about that?
No, to give greater color to that, and I probably just misunderstood Alan's question because I think it's a direct bullseye on what Dolphin was doing. Is the expenses go up because we incurred expenses related to Dolphin 2.0. So we were building the NFT marketplace, you might recall. That's not crazy expensive, but it's pretty darn expensive for a company our size, and we didn't capitalize it, right? So it's all expense. So it would flow through and add to those expenses, and that kind of goes to the underlying thesis of Dolphin, right? Of what we're hoping we're doing, which is building a better mousetrap of cash positive company that uses some of that cash to invest or make investments in opportunities like NFTs. So it dragged down the expenses, or excuse me, it increased the expenses and depressed the margin, like you say, for that individual quarter. But of course, you do those types of investments because you hope that in future quarters it'll return, a multiple of what you invested.
Okay. Actually, that made perfect sense. The way you guys talked about it on the call, I didn't catch that, but as soon as you said it, then it hit me. Okay, that makes perfect sense. So
sure, and I may have misunderstood Alan. And those expenses carry into a Q1, but pretty close to just before the end of Q1, we finished the build. So we've made the investment and we're excited for it.
One thing I didn't hear you talk about was the agency for the blockchain, metaverse, Web3 clients. And I saw the PR on it, but I don't think, to my knowledge, I haven't seen you talk about it anywhere, nor have I talked to you about it. And I wondered if Yeah, maybe talk a little bit about what your plan is for that group.
Sure. Yeah. And that's always tricky too, because to be honest with you, I'm never really entirely sure what I'm allowed to say about what occurred after the quarter. Right. So that was an announcement we made at the end of January, but it's public. So of course I feel, well, the thought there was independent of what we're doing with NFTs, Dolphin, right? Our PR firms are in demand in the last year for other people doing either NFT collections, metaverse applications, or other what are generally described as Web3, right? And by the way, this trend isn't slowing down. If anything, it's increasing. And so by the time we hit the new year and we did our CEO summit in Miami in January, we were looking at the year ahead and at some of the I guess you'd say opportunities and also things that had occurred in the second half of last year. And we added up that across our PR agencies, we had over 24, we passed 24 clients of our PR firms that were Web3 companies. And some of them are pretty big names. We work with Galaxy Interactive, Mike Novogratz's firm, some of their portfolio investments, the Sandbox has been a client. We have some pretty signature brands in there. And the thought was, we invested early in NFTs. As you all remember, we made our announcement back in March of last year, and that we thought that NFTs would, as one application of blockchain technology, right? There are more, such as the metaverse, and there are more, such as, on and on and on, right? We could go down the line, that there would be entertainment applications for this technology. And so all of our PR firms are playing in this space at this point. One that probably has the most number of clients in that world was the most recent acquisition that we made last January, BHI, and they've really built quite an expertise in it. And so that's where those two previous clients I mentioned sit as well. So we thought we should market, the marketers should market themselves and give it a brand name and be able to fly one banner that says we have, I'm not saying it's the largest in this very new world, but we're unaware of any other PR firm that has as many clients in that world as we do. And we got some pretty good ones too. So that was the idea of coming out with We Come in Peace at the end of January. And since then, it just hasn't slowed down at all. The inflow is tremendous in that world. And if I could, and this may be giving too long of an answer, and correct me if I'm wrong, but it reminded me a little bit of 2016. You remember it was 2016 where the light bulb went off, in my head at least, to what this play could be for Dolphin. And the light bulb was the announcements that the studios were going to pull their content off of Netflix, and it certainly didn't take Nostradamus to guess that the studios would start their own streaming services, right? And so, and then that would, the next domino to fall would be, well, they'd have to create original content to compete, and that meant there was going to be, the streaming wars that we know today, that everyone was going to be spending gobs and gobs and gobs of money to make original content and compete for direct-to-consumer streaming platforms, right? So the idea of this super group was born out of that moment of time and insight in the summer of 2016, which led me to hire James Carbonara about a month later, and off we went. And we had made an offer to 42 West. We bought them in March of 2017 and started building a super group, right? But the thought was in that moment in time that within a few short years, which is where we're at now, I mean, let's put it in perspective. I mean, I think Netflix is spending 17 billion this year on content. Amazon's over 10 billion. I'm pretty sure HBO Max is going to be over 10. Look at how much Disney's spending, blah, blah. And my line during the road shows at the end of 2017 is going to be, after we already had 42 West, is there's a flood of original programming coming, and somebody's got to promote it. Right. And those are the tailwinds you're seeing about our quarter after quarter revenue growth across companies. What I'll say now is, I think, look who I'm talking to, an investment community, right? I think everyone on this call is probably aware of the amount of VC money, private equity money, large private equity firms being established to invest in Web3. Call it, the creator economy meets NFTs, call it blockchain, call it crypto, call it a metaverse, call it whatever you want. But look at all that money that was invested last year in 2021. Look at all the money invested through the first. Does anybody think it's slowing down? Look at Katie Hahn's fund. Look at pick any fund, right? $2 billion being raised here, there, and everywhere by everybody each. Now the crypto exchanges have their own funds. FTX has a venture fund. Coinbase has a venture, right? So where I'm going with that is those guys are all spending money. Do we agree? They have it across all these different products and different companies. Do we agree? Well, when those products are ready to come to market, somebody's got to promote them. It's the same line, right? And what we're seeing is, we raised a banner and said, this elite group of marketers we're early. We take credit for being early in this space. We're way ahead of the competition, and we have some signature brands, and it just feels like it's happening again. And I think it's going to be tailwinds for the next 2, 3, 4, 5 years because all of these products are about to hit the market. That was the logic behind We Come in Peace. If that was helpful, I don't know.
Yeah, no, very much, very much. So, and I forgot the very first question I wanted to ask you. So I'm a little out of order here, but just kind of listening to the Q4 full year call, and looking at the results for the year. What's the thing? What's the big thing that we should not have missed? That you definitely think we as investors should have taken note of from that?
Well, it's tough. I mean, in this environment of, microcap down so much, and we're certainly, in that group. I mean, I don't know that people missed it as much as when there's a bounce back. I hope that companies like ourselves that have such good news to report financially, forget the optionality. I hope that investors don't miss that. Hey, here's a microcap with everything I said on that call, right? No going concern. We're trading at, I think today, under 1x trailing 12-month revenue. I mean, we're cash positive. I mean, at some point you want to believe that no matter what you think about our different 2.0, you could think that all of them are going to miss that. You think that we're still a good value at where we are. But no, I think the investors are probably hopefully starting to hear the story and get it right. And what's going to be exciting for us, and probably what you want to ask some questions about, Brad, is, now last year was the year where we started announcing our initiatives. And then this summer is when those initiatives start making revenue. And then once we have revenue from these initiatives, I think people are going to be having to put a value on them, because right now the market's valuing all of Dolphin 2.0 at 0. And that just seems hard for us to believe.
Oh, not only that, I think they're way undervaluing Dolphin 1.0. They seem to be.
Oh, I couldn't agree more.
Okay, so Ryan, one of our guests, put a question here. I'll read it real quick. He said, "I know a live events company acquisition has been on the roadmap for a good while now. I understand it's been pushed to the end of the year, which is news to me. I guess I didn't hear you say that. But what sort of things were you seeing that influenced that decision making, as it was previously thought you'd be pushing into that space in Q2, Q3?" Question.
Yeah, I didn't mean to signal that I thought it would be. Ryan was right. I did say second half of the year, and I wasn't trying to have it perceived as a push as much as what I think I said on the Q3 call, that we think we're coming out of COVID fully by the spring. That's certainly proven true for us, and what we're seeing. The music tours are holding. There's been tickets are selling out fast and furious. We just had a great one of our acts. I think they sold 350,000 tickets in under an hour for dates this summer. So we feel confident we can start our live event aspirations in the second half of the year. If it was Q3 or Q4, I don't know that. It really now just comes down to practical timing. We take maybe remind some people on the call what we call 2.0 is Dolphin wanting to own some of the assets we're marketing. And the 3 types of assets, we want to own assets where our form of marketing will most likely influence success. So we consider those types of assets to fall into 3 buckets: consumer products, which we've started, and that's NFTs. I guess you could call that Midnight Theater, although it kind of crosses all the buckets. But so consumer products, content. We think we can market content pretty well. I hope people believe that with 42 West and Surefire and others. So we signaled on the 10K call now yesterday that we expect to be able to make our first content announcements shortly. And by shortly, I would assume if I were you, that's Q2 for sure. And then the last of the three buckets would be live events. We think we can own live events and market them very well because our PR firms already do, in music and food, et cetera. And so that last category would start in the second half of the year, since content's starting now. And that was what I was trying to say there.
Gotcha. So
And it is ironic because, as the old saying goes, sorry, Brad, that, man makes plans and God laughs. For those who remember the road shows of 2018 and 2019, when I was most often asked, like, how do you know you can buy companies, and how do you know they're going to work well together, and how do you know all this other stuff? I said, well, the whole point when we're done is to start this thing called Dolphin 2.0. And I used as an example a live event. I really did think that we were going to buy the live event company, and the plan was always going to be the last one bought. That was true. It was going to be at the end of 2020, and that in the summer of 2021, the very first 2.0 event would have been like a cooking. I used to use the chili cook-off example that many people remember. I think most of the time in my fictitious festival, I used to put it in Memphis, Tennessee, and I use that as an example to get people thinking about how, oh yeah, I bet they could market that really well. Well, of course, now it's the last thing we're doing, but we're still going to do a chili cook-off. I promise, Brad.
So are you gonna still acquire the live event company, or are you gonna stand your own up from scratch?
I think we're gonna, the build or buy theory. We think we're still going down an approach that we would acquire one, but it's not required, since the point of it is to, it's to bring in the expertise to allow us to launch our own events, right? So it could be something we could, especially today, hire to, because, in an active market, it was just easier to buy a company back in the day. But today, I mean, a lot of those companies either went under. The talent at those companies that our PR firms have worked with for decades are either scattered or available, so we'll see if there's a company that either reassembles or somehow weathered a 2-year storm that we would like to bring into the group, or we would just build one, kind of like we come in peace.
Josh,
Yeah.
I interrupted you, my friend. What'd you have?
Nope, I was just going to let you know that there was that follow-up question, but you already hit it.
Oh, okay. Yeah, for once in a blue moon, I'm actually on top of things. Not always, but for those who are listening, if you're muted, you want to be unmuted to ask a question, just raise your hand and Josh will take care of that. So I got two things that maybe cause a little, what's the word? Stomach pains, a little anxiety maybe with some investors. I just wanted to bring up briefly. One, the LPC purchase agreement that I think that was filed late December. I haven't had a chance to talk to you about that. I did speak with James about it a little bit.
Sure.
I think I could be wrong. But just based on the feedback I see and all that, I do think there's still some investors looking at that and maybe have, not sure what to make of it, or if they trust it or that sort of a thing. I wonder, I'd just like for you to take the opportunity to speak to that and what the purpose of it was and whatever else you can tell us.
Sure. Well, thanks for bringing it up then, because it shouldn't cause agita, I hope. The thought process there was this. So for those who remember our story going back 2 years, we filed Q1 2020 late. We re-looked at, well, the short answer is that we filed late, and that lost us our baby shelf. So we had put a baby shelf in place after we uplisted to NASDAQ. And so I think it was February of 2018. And of course, as you know, you lose the ability to use a baby shelf for a year, right, if you file timely from that point forward. So when last Q2 of last year, which I always remember because we talked about working capital surplus and the balance sheet in the middle of the year and how it was turning around, and it was a great call. But we were eligible to put a baby shelf back, which we did in September. And we tried to signal to the market that we didn't have any desire to do a raise at the time, because it wasn't something like, oh, they're putting up a baby shelf, they're going to dilute. So we put up a baby shelf with a capacity of $100 million, which we thought would signal to the market, well, clearly they're not going to draw on the baby shelf and do $100 million, which we didn't. And at the time, you also might remember last spring and summer, we've had some highly liquid days. Today wasn't a bad one either at 8 million shares, but when we announced the NFT business, I think it floored people that day back in March. We traded $2.5 billion of Dolphin stock. You heard that right. And the next day was over $1.5 billion. So what that did was it put us on the radar of a lot of investment banks. And when we did the FTX announcement, I think we did over $600 million traded in that day. And that's pretty hard to do, guys, when your market cap's under 40 million. So what's going on? That's a great question. So we got flooded with offers to set up an ATM, and what a great vehicle that is. And what if you ever wanted to do a small draw? And we thought about putting one of those in place, but it's a corporate governance, and we understand that a lot of companies have those, and that's just what's used today if you ever wanted a quick draw. But an ATM doesn't really work for Dolphin. Why? Because we're always either thinking about an acquisition or about to announce a 2.0 initiative. And you're not allowed to draw on an ATM if the management has inside information, which we pretty much do all the time. So we did a survey of the last 3 years, and there's 1 year, I think it was 2018 or 2019, where we wouldn't have even been able to draw on an ATM until late November. So what's the point? So we just shelved it, talked to the board, and we just said, nah, we don't need to do an ATM. That was September, October, November. And we had an opportunity, our law firm brought us the opportunity of the Lincoln Park type of equity line, because as a solution is like an alternative to an ATM. The theory being that if you're ever going to do a draw on a baby shelf or use an investment bank, they typically want they want you to do 15, 20, 25 million at a time. And we're turning cash positive, and we like we just don't have a need for that type of capital, and wouldn't seek to either dilute to that or ever raise money if there's not a clear use of proceeds. But we do like the idea of having something in place that would allow us to be surgical. Like if you want $1 million or $2 million to take advantage of an opportunity that comes along, especially in Dolphin 2.0, that sounds pretty good to us. So for something that would be under $5 million, that's the point of an ATM. Well, an equity line for us can serve the same purpose, because once you put an equity line in place, it's not subject to blackout windows, and which ATMs are, and that worry about when you can't use it. So on legal advice, that was a great point. They said, well, you kind of have to either put it in place by the end of the year, or you got to wait till your next window, which would be sometime in late May. So we put it together before the end of the year, and tried to signal with it like we tried to signal with the baby shelf. If we were going to do an ATM, we would have done a 25 million ATM to kind of signal to people that we weren't going to draw on it. We didn't need to draw on it the next day or anything like that. We didn't have a desire to. So we're using the equity line in our minds as an alternative for Dolphin to an ATM, and gives us the ability to draw in a surgical manner when an opportunity arises, if it arises.
The other one was just a question of, is there any plans, any thoughts on converting the preferred stock anytime in the future, or is it just we're just gonna leave it sit for the time being?
Oh, it's gonna sit there.
Okay.
Yeah, it's I wouldn't want that for the investors, and that's why we structured it the way we did. It gives me the stability of the voting control, which is what was so crucial to be able to go out to the owners of the private companies and say, you're not going to go into a public company and be fired within 6 months or 12 months, as some of them had that experience before. But I am not looking to convert that into common in any time in the near future, mid future, long future.
Okay. All right. There's some that would rather you did, to be honest. Just throwing that out there. But and then probably others who wish you wouldn't. So I'm sure there's some of both.
Yeah. Everyone likes the end result, but they don't. Yeah, they wish they, one way or the other, right? Yeah.
Yeah. So, as far as Creature Chronicles, I had a question on here about is it? I consider like the launch of that, or it seems like it's been delayed. Maybe started and then paused and delayed, and maybe I'm mischaracterizing it. And you can accuse me of that if you'd like. But I'm wondering, is it just that you need more time to sort of develop your strategy on that, or is it really you're just getting the product ready, or what's pushing that back?
There were two factors there, and um, you're not wrong, Brad. It was, and you're hearing me hesitate because I'm not sure if I'd say it was delayed as much as part of the plan, but it was delayed. So here's where we were with it. We announced the content in December, and Anthony was working on the 10,000 avatars, right? Which we're very proud of. We love them, and we were building the marketplace, and along when we thought we'd be done with the marketplace, February, March timeframe, we had the introduction to Flower Girls. And Flower Girls is a collection that had already been available for sale. Creature Chronicles isn't available for sale, as you know, right? We haven't launched it. And it really was an opportunity around Flower Girls for us in the sense that they had built up they have a very nice community online. Buyers active on Discord, across multiple social media channels, and they're doing everything right. And both from a product management standpoint, as well as just they're good people in life, and the charity aspect of it was very appealing to us. So we entered into the agreement and a partnership with Flower Girls that we're very proud of. And we thought we'd be smart to have the next announcement and probably a product drop be from Flower Girls. And go through the process of co-marketing something that's a sequel, if you will, almost starting with the learnings we can do from having Batman 2 out in the market or whatever, and coupled with our marketers' desires. I mean, this is kind of every good marketer looks for a hook, and a marketing 101 is, with Anthony's collection, when do you want to drop it? Now, you could just say, hey, you got a great collection, drop it on a Tuesday in the middle of March, right? But there was a lot of good, healthy conversation internally within the Dolphin companies, and the thought was, well, there is a certain big event. We haven't announced when we drop it, so I'll be careful. But just so I don't give away a secret, I don't think it's any type of stock information secret, but more just a marketing information secret. But there might be a big event that happens every summer around, comics, hypothetically. That would be a great place to drop a collection from a guy like Anthony Francisco. So that got us thinking, well, that kind of works well with the timing of Flower Girls, because if we have a Flower Girls announcement, as I think I said on the call, anticipated here in Q2, we could kind of go through that process with our friends with Flower Girls community. And there's a lot of love fest. And you might think, oh, what do they have in common? Well, they have a lot, because Flower Girls is great art. I mean, it starts with that it's beautiful designs, and it's really artistic. If you look at it, it's not an ape or a chameleon or a panda or something. It's more of a high quality art, and there's a lot of respect between the artist of Flower Girls, Varvara Ale, and Anthony Francisco. So the thought process was to use our collections to complement each other, and our thought process was to put Flower Girls first, and I guess, to use your word, Brad, delay Creature Chronicles until we also had a marketing hub for the launch, and that's what we did. We could, once we had our site finished, we could have launched it. We could launch any time now, but it was a marketing decision, not a are we ready decision.
So that you just touched on 3 or 4 of my other questions. So I'll just I don't know if you know this or not. I think you probably know this, but something leaked out about a Blue Angels documentary with J.J. Abrams and Bad Robot. And when I say leaked out, it's in print all over the internet, so person can find it. So I don't think I think it's something you can talk about, possibly.
Oh, Brad, the fact that you guys do your homework. Well, I will say this, Brad, that, we've long said that content would be another leg of our 2.0 stool. And you got me, my friend, you got me with this question. We are looking forward to having some really cool partnerships to announce in the short term. And yes, there may be certain announcements we have where a project may be in production already. And we don't want it to take away from the excitement of what we might be sharing, but the opportunity to partner with somebody like an elite of an elite filmmaker like a J.J. Abrams. I mean, that's the Brad Steveson of directing right there. So, and producing. So that would be a great opportunity for us if it avails itself.
That would be cool. And yes, we do pay attention.
Yes, you do. You guys are great.
So probably you're going to tell me I can't answer this, but I like to ask you at least one or two questions that you tell me you're not going to answer.
I'm doing well today, though.
So can you give me a value, how you value your 2.0 initiatives to date that you've announced to date? Can you, not individually maybe, but just give me a total, how do you kind of in aggregate, what would you value those initiatives at if you had to value them right now?
Yeah. Well, you knew I couldn't answer that one, Brad. But I could think through with you. Well, if you want, I mean, it's hard for me not to think of them individually. Boy, you're asking me a tough one there, because we kind of model ourselves off of each one, much like I'm sure what your audience does, right? I mean, I really feel like our 2.0 approach will resonate strongly with more seasoned investors, because it's a portfolio of investments is what we're doing, each one of which, of course, is strategic. We have reasons to believe that we can influence the success of it, right? We're not doing this with lithium batteries or electric cars or something that might be great investments, but what do we know about that, right? And it's that approach, and each one's an individual decision, and each one has its own business model. But I do believe that when we get to the fall and the midnight theaters open and the NFT collections are hitting the market, each one of those two will be able to be valued easier than today, right? Not on speculation, but on actual revenue and anticipation. And either one of those two in success will most likely have a valuation on it by a reasonable investor that is greater than the entire market cap of Dolphin. So I think that's
kind of what I thought. That's the reason I asked you the question, actually. Yeah.
Yeah. I mean, like without saying anything out of school, I mean, just, we shared, let's just take, well, I don't want to steal your questions, Fred. I was just going to pick an example of Midnight Theater, but I'll stop if you want.
Well, I will say, since you led the Midnight Theater, you kind of gave us a framework of how to figure up maybe what that might do. And so I did a little math, and I'm going to throw out a number for you to react to. 25 million in revenue. Does that seem in the ballpark? Am I in the ballpark, or am I way off base?
No, I think, did you get help with that, Brad? Did you ask a restaurant friend of yours or something?
We do our homework.
Yeah, we were trying to give that type of modeling work because, it's to let people do exactly what you just did. And if we go through your assumptions, yes, I think I think that's a good assumption, and I don't think you're wildly off. And when, now you got to be fully operational. So I wouldn't say that's this summer. I'd say that's this fall, right? And then you got to go on a go forward basis. And as we look at at Midnight Theater, and we have tremendous expertise in promoting restaurants, and we know what a quality restaurant from Josh Cohen was probably going to pull in with 77 seats plus a private dining room adds another 20, right? And you got a 40-seat bar, so it gives you a good sense right there. And then you add in a variety theater now, where it within a couple of years you're on a run rate like that, and you might be there within year one. I'm just saying, whatever it might be. Then a variety theater like that also has even a little bit more upside, because you'll have you'll have buyouts, you'll have special events, you'll have premium ticket prices because you're probably pricing tickets at between 100 and 150 when you did your model. I don't know, I'm guessing, but you'll have certain events that'll be the higher end of that range or even more, right? And then you'll have sponsorship money. So in success, it could even be greater. But if you stuck with a $25 million number, hypothetically, then you can see pretty quickly how meaningful that is for Dolphin, because, we wouldn't have all of that because we'd be, if we exercise our options, closer to 40% of that, of both revenue and profit. But you also have multiple locations, right?
Yeah.
You have a brand. Yeah.
Well, that led me to what I think is the most important question today, and then I'm going to call on Brian right after this. But how much, since I am in the ballpark with the 25 million, I'm wondering how much of that revenue do you think will be contributed from James Carbonara at the Midnight Theater bar?
The bar?
Yeah. Like, what percentage of that revenue will come from him, do you think?
Well, if he wants to stay RIR rep for the next 6 years, like he's been the last 6 years, I got to believe he's got to spend at least $100 a year at that bar. At least.
All right. Well, hey, Brian, jump in. Sorry. Thanks for raising your hand.
Yep. Nope. Unlike yourself, Brad, I'm not afraid to go through them individually. So,
yeah, no, jump in.
But so I'm newer to the story. So if some of these couple of questions or things that are out there already, I apologize for it. But I didn't see quickly where you've disclosed your ownership percentages on these 2.0 initiatives. Is that out there somewhere?
We said it on our earnings call yesterday, and it'll be in the 10K when it gets filed, but it had not been before.
Okay, so real quick, are they all minority interests?
Yes. Well, no. NFTs, no. We own the NFT collections, but for the partnership with Flower Girls. But we own outright the others. Midnight Theater, we own 12.5%, 13% of it today, and we have an option for another 25% approximately on both. That's why I was rounding to closer to 40% of Midnight Theater for that New York location that opens in June, and the brand as a whole, and then Craft House and Fanjold are both between 5 and 10%.
Okay, so these are actually going to be on the cost method until you get over 20% then, right?
Yeah, and if I could,
Yeah.
they speak to two different types of investments, because as I was trying to articulate on the call yesterday, try and help investors think about how we think about it, I almost want to call Craft House and Fanjold Dolphin 1.5, because on one hand, they kind of bridge both, because we get a monthly cash fee to promote them like we do in Dolphin 1.0, right? But we have a small piece of the company, 5 to 10%, like Dolphin 2.0. So, there are certain brokers in the world, and one of my favorite ones, who call me and say, just do nothing except Dolphin 1.5 deals because you're getting paid, we're not putting up investment dollars. You're getting paid, and then you have an equity stake. Now, we also often take a kicker to be able to put in cash and acquire more, right? But of course, the trade-off is, it's the risk reward ratio is great on those deals, but versus a Midnight Theater where we put in $1 million, we don't pull out of operations of Midnight Theaters a fee for ourselves to promote it, but we own a very large percentage, relatively. And in success, you can, it's incrementally more, right?
So I guess I caution Brad to get too excited on Midnight Theater until you exercise your option, right? Because you're not going to see that sharing of profit.
Yeah, and the way that Midnight Theater, until we open, that's right. And the way that Midnight Theater is structured is, and this may be different versus traditional equity investments, but it's very similar to what I'm used to in the film and television business. And restaurants work the same way, of course. the first profits of the venture go back to pay back the equity. So that's interesting too, right? You get and then before any profit participants would also share. So before, let's say the manager share, or the chef shares, or others, you get your capital back. So, and it's returned to you. So that's appealing to us about those, a venue investment like that, instead of just profit distributions, which is great, in a percentage of your ownership, you also get capital back until you're recouped in full, plus 10%.
Which is about $1 million, I think you said, right?
Mhm.
Right, as of now, but before you exercise the options.
That's right. So you get actually $1.1 million back, for example. And then if we don't exercise the options, we'd have 12.5% of all profit distributions forevermore after that. If that was helpful.
Okay, yeah. And then as far as your filing status, when will you be filing?
We expect in the next day or two to be able
Yeah.
to file, and that's exciting.
And why haven't you been able to, get the resources, pay who you have to pay to ensure you file on a timely basis?
I don't think it's money,
Yeah.
Brian. If it were, this would have been solved a long time ago. I think it's something that we aspire to do both better in the future and try and change some things up to be able to do it in the near future, because we don't like not filing before March 31st, and it brings it down to the wire when it's near the end of the grace period. So it's frustrating, and it's particularly frustrating for us, if I could be so bold. Or another aspect of why it's frustrating is that because we have good news to report. So you're sitting out there with record revenue and everything else that you heard on that call and in the earnings release, and you can't talk about it, and you're trying to hope that the market will be there for you when you do have the good news to report. So it's extremely frustrating for us, and no one's more aware of it than we are, I can promise you.
So whatever the challenges have been, are you comfortable in saying that they're not going to be with us going forward?
All I can promise is that the corrections that we're going to take to try and make them not be with us going forward are going to be done, and that I'll do everything within my power to see a difference.
Sure.
On a go forward basis.
Very good.
Yeah. It would be nice to report early and wave the flag.
I forgot to tell you, Brian was tough, but he's a good guy, though.
Oh, no, I appreciate the questions.
And Bill, I forgot to tell you that Brad pinged me on the side and asked me to ask you the tough questions.
That's right.
Well,
we got a little good cop, bad cop going, right?
Yeah, that was it for me. Thank you, Bill.
Sure thing. Appreciate it.
Okay, so if anybody else has a question, please raise your hand. And I do have another one on the Flower Girls. It's probably another question you're not going to answer. But I know they're giving, I think if I understood you right, they're giving away about 20% of what they make to charities. And so then the other 80% is somehow getting split between you and them. And I don't think I heard you say what that partnership was, if it was a 50-50 deal or something like that. So maybe you can't respond to that, but
yeah, I don't think I said it on the earnings call, which means I probably can't say it till the K is out. But I could say that I do think that commonly when you use the word partnership in the crypto NFT space, most of those deals, if not a vast majority of them, are in that 50-50 range.
Okay. And then and then that would also, if that were the deal, let's just say that applied to the initial sale, then the resales, would it be the same? Would that follow along with that?
Yeah, your partners in the brand. That's right. So now, and remember, I mean, the resales are valuable because they give you a royalty, if you will. Now, those resale percentages in the industry are 5 to 10% of resales go to the originator, right? To, let's say, Flower Girls in this case, of course. So They have a deal, or their royalty percentage is on the higher side of the industry. So in that range, you get, and so when you see something like, hey, total sales to date of NFTs of any collection, that's the total of primary and secondary. So what you have to do is you have to split out the primary, as you guys do, I'm sure, but just if anyone listening isn't sure how that works. So they're the classic 10,000 piece collection today, roughly sold in crypto, but roughly $200 a piece. So that makes the total market value of the initial sale, which is what we intend to do with Creature Chronicles too, by the way. Then that'll be a $2 million product. And then so the initial 2 million goes entirely 100% to the owner, and then any secondary sales, you get 5 to 10%. So let's say, make math easy, 10% of the next 13 million. I think they're roughly of secondary sales. I think they're past that now, but nonetheless, that means that that's another 1.3 million to the originator. So like Bored Apes, did 2 million on the primary, I believe, but of course now they're over $1 billion on secondary. So, give you a sense that sometimes your secondary can dwarf your primary over time, because it's forever, of course.
Yeah, Flower Girls looks to me like it just looks like it has a lot of potential to me.
What's interesting about that, and we're going to find out, I mean, transparently speaking, I got asked a question on that call about, how many collections can you drop with one brand a year? Right? The truth is no one knows, right? We think we can do 2 a year. We'll find out together, right? And some of that's going to change over time, because, still the average consumer has never bought an NFT. Right. I mean, we're still, I think I read somewhere that the entire NFT market of last year, which boomed over $20 billion, was done with 500,000 wallets. Coinbase has a wait list today of 2 million wallets that want to, be able to trade on their NFT platform. And that's a staggering number, but it's also a fraction of the American consumer public, right? I mean, the total addressable market is much, much bigger if you can get to the general consumer. So habits are going to change over time. The way you market's going to change over time. These are early days. But another question is, we haven't seen yet, we think we can do it with Flower Girls, have an NFT collection that crosses into general brand development, right? I mean, if you have I was in the kids business, right? We were blessed to have some hit kids TV shows. What's the first thing any parent will tell you? I hate Disney. I'm buying all these products for my kids. How many? You got your frozen thermos and a lunchbox and it's not even the content, right? Well, we think Flower Girls has very organic brand extensions. I mean, first of all, it's flowers in the title, right? But it also signifies beauty. It signifies, just an elegance to it. There's just a lot of brand categories that you can do brand partnerships with. You can license, in other words. So think of everything you've ever seen your favorite cartoon characters on, and these aren't cartoons, but animated art like this. And we have reach into a lot of those categories. We represent products in a lot of those categories. So I think that's where, it's, yes, we will promote NFT drops, and yes, there are going to be future collections to promote, but there's also an opportunity to take this brand and extend it. And of course, that's that virtuous flywheel that you hope for, and you create an evergreen, like what Peanuts was and is, or whatever your favorite is, right? So I think we're going to give that a shot and see how we do with that this year.
Let's see. I had that question. You answered it. I've got
And if
one.
I could, Brad, that's another reason why you go out with the sequel of Flower Girls, right?
Yeah. Well, yeah, and I thought I heard you say on the call, and I just more of a clarifying thing, that something you talked about: scripted and unscripted TV series, digital and traditional publishing, consumer products, music, gaming, and events, and promote NFT drops. All that you were talking about Flower Girls, if I remember right. Is that correct?
Yes. And going back one step, because sometimes we like to, maybe if we share our marketing logic, you can see. So why I was just saying, it's another reason to prioritize Flower Girls, if you will, and have Creatures, which we're super excited by. Again, there's no lack of excitement for Creature Chronicles, come out with a marketing hook after is because Flower Girls is going to be first into those brand extensions. It's already out in the market, right? It's been on the market for 4 months. It's an active community. It's sold out. So we can have brand extension conversations today, and we are. So, we're kind of writing a playbook with the NFT collection that is undeniably successful, right? What are the 15 million sales, right? So that's a playbook we can learn from, trying to apply our principles from the analog world into the digital world and see how we're doing. And then when Creatures comes out, knock on wood, we have the same success in terms of retail pickup, right? And we sell out the collection. When that goes into market, then we can apply some of those same principles. It'll be kind of backwards to put out Creatures first and then do, to us, we're trying to draft off of knowledge that we can gain.
That makes sense. So Aaron asked a question. Let me see.
I don't want to answer.
As more of an outsider new to their company, I'd like to know whether their plans include sustained growth on last year's trajectory or more measured cash burning, and if that relates to an expectation of what types return on last year's investments. Seems analysts were having I think you've kind of already answered most of this. Seems analysts were having a harder time with capturing the future. And you've covered that too, I think. But anything in that question you didn't cover? I think you've pretty much covered all of it.
No, we're in a transition phase now. If this will help Aaron too, which I acknowledge, and not to make everything about a 3-year plan, because we don't think that way either. But we built the group over 3.5 years. We're in this next phase of, let's call it 3 years, where we expect to, we'll be cash positive. We'll be reinvesting some of that in 2.0. There'll come a tipping point in about 3 years where the cash we're spinning off, because we'll have 1.0, which is still growing, but 2.0, right, generating cash for us, that we will just have excess cash. Right now, we're trying to manage ourselves to invest in quality 2.0 initiatives like Midnight Theater. We think and NFTs that can be so transformative for us, and stay, operating income positive for the year. We're very proud of that, right? Because those investments are in the expenses. So that's the balancing act that was the hardest last year. It'll be a little bit easier this year and a little bit easier next year. Why? Because we're going to be generating more and more cash each year. So, but that's also why, to swing it full circle, we made the equity line, which is our version of an ATM, for 3 years, right? Because, we don't feel we're going to need that type of device, but we'll have a stronger free cash flow, and barring something I couldn't imagine today, we just generate the cash we need for any investment.
Ryan, if that wasn't good enough, raise your hand. We'll unmute you. You can ask it. But anybody else have a question?
I think that was Aaron's question.
Ryan was asking on behalf of Aaron, and I think.
Oh, okay.
Yeah.
I don't know
but
which Aaron it is, but.
Well, there's a couple of Aarons, so I think it's not the Aaron that you're thinking of.
Okay.
All right. Well, I don't see any more. Raise your hand if you have one. I'll wait another second.
Well, I have one.
Okay, go ahead.
All right. I've had the pleasure to talk to you a couple times, Brad. You've always been, as I've said before, I hope your listeners know how you do the most research of anybody that I speak to on a semi-regular basis. Congratulations. So I'd like to know, as a loyal listener, when are you going to Midnight Theater? And James Carbonaro wants to buy you a drink at the bar. I can't go before June, so it's got to be June or later.
Okay. Well, it's funny you say that, as my wife has been mentioning that she would love to take a trip to New York sometime soon. So maybe we'll work it out this summer.
Woohoo!
I'm not opposed to it. I'm not opposed to it, especially if James is buying.
He's got $100 credit.
Yeah, I'd fly about anywhere for a free beer. That'd be great.
Oh, we do mixed cocktails too, so get ready to be fancy.
Well, will Craft House be there, do you think?
No, we'll see.
If you had to guess. If you had to guess. All right. Well, if no other questions, I think we're about at the end of the time we scheduled with you anyway. And I'm sure
Great.
you probably have a lot of other people knocking on your door wanting your time too. So we appreciate you joining us.
Sure. And thank you guys as always. I appreciate it. And we definitely believe that, and I really am sincere when I say thank you for the time you're taking to hear our story, because we know it's not the simplest story with our different investments, but we definitely believe that people that understand us, we want the more educated investors we have, the better we're going to do, because, you know, we believe in our story and we just want other people to understand it as well. So thank you for helping us take our story to the world.
All right. Thank you very much, Bill. Good luck. We'll talk to you
Okay.
again.
Thanks, guys.
Some or all the speakers may maintain positions in the securities discussed in this podcast. The views in this podcast expressed are those of the speakers and not Breakout investors. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. Neither Breakout Investors nor any of its affiliates makes any representation or warranty, express or implied, as to the accuracy or completeness of the statements or any information presented by this podcast and any liability, including in respect of direct, indirect, or consequential loss or damage, therefore is expressly disclaimed. No one on this podcast is an investment advisor, and no one is providing investment advice. Before investing in any company's stock, you must do your own research. Thank you for listening.